And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Prep. Today is Monday, January the 16th. My name is John Hoagland. Thanks for trusting me with your time. Today is a national holiday. It's Martin Luther King Remembrance Day. Markets are abbreviated. Our primary markets are mostly closed today. I'm glad to see we've still got a few futures warriors out there looking for some opportunities. Reminding myself today to manage my expectations. If I do get some decent trades, I'm going to be looking for some reasonable profit targets today. Remind yourself you have to be flat before noon today. Before noon, all of these futures markets are going to close. They'll reopen tonight at 5 o'clock for a full day of trading tomorrow. We've got no economic releases today. Banks are closed. Mail will not be delivered today. And all the kids are going to be home from school today. So that's going to keep a lot of traders, maybe a lot of our longer time frame traders, away from the markets today. It should be a low volume, kind of a low liquidity type day as well. And again, there's no economic numbers today. Looking forward to what we have this week. We have nothing really important tomorrow. Empire State Manufacturing Index tomorrow. There are going to be a couple of talking Feds tomorrow, including John Williams tomorrow at 2 p.m. Central. Wednesday, probably our most important information for this week. The PPI final demand and retail sales due out at 7:30 a.m. Central on Wednesday. We got a few talking Feds throughout the day, including Bostic, Bullard, and Logan. Industrial production at 8:15. Business inventories, housing market index at 9. We have the Beige Book coming out on Wednesday. That is 2 weeks, 2-week notice before the FOMC meeting. Thursday, we have housing starts and permits, jobless claims as usual on Thursday. Crude oil inventories are going to be on Thursday at 10 o'clock Central with the EIA natural gas report due out at 9:30. We do have a couple of talking Feds on Thursday as well. And then Friday, a limited number of releases with existing home sales. So just looking at what we've got, the focus this week is going to be on that retail sales number. Investors will be looking to see a continuing drop in retail sales, indicating how well that the Fed is doing in cooling the economy. Also in focus this week, we have some more earnings coming out. None, of course, today, but the banking sector resumes earnings season tomorrow. We have Netflix on Thursday. The World Economic Forum is starting their meeting in Davos this week. World leaders, bank policymakers, and corporate leaders are going to get together and just sit there and try and decide how they can cut up the pie bigger for themselves. That's just the way it looks to me. But we're going to get to see maybe a little bit of what they talk about this week. So that is going to be the major focuses this week. As far as the VIX is closed today. The dollar index up slightly at 102.43. And the yield in the 10-year will not move today. Of course, the futures markets are open, but bond markets are closed. 3.5% is where they are going to remain for the day. So no moving targets, a limited number of limited information available to us today. Again, remind yourself to manage your expectations today. If I don't take a trade today, I'm fine with that. Make sure, as always, hitting the lucky like button, sharing, commenting, question, feedback, heckling, and love are always welcome on the Market Prep. Subscribe to our YouTube channel so you get notified when we do go live. And it is good to see that there are still a few futures warriors out there looking for opportunities today. Bear Goes Long is the first in the room this morning. You win the prize, Bear. George, good morning. Lacey is taking her first nap of the day. Ron Merlot, good to see you. You stay classy. Dan Trader, good to see you. Mr. Decker, Fred Decker, good to see you. The Rooster, Zach, I should say. Dimitar, Sarah Hall, prayers and love to you as always. Fred is a Green Bay Packers fan. I was delighted to see the Minnesota Vikings lose yesterday. Fred, I was kind of hoping they were going to win. Of course, I do have some roots in Minnesota and that area. Mike Fries, good morning. Shadow of Crimson, good morning. Avery, James Brody, Vince, my guy, good morning. Jared, good to see you. Supper's ready. I don't know if I've seen that chat name before. Glad to see you, and thanks for chiming in and saying good morning. If this is your first trip to the forecast, well, you started on a kind of a quiet day, but we're going to see what we can see in these charts. Stephen C., Great Dane, good morning. Ray, my wildebeest trader, is with us. Good morning, Ray. SR, new to this. Well, SR, we're glad to see that you're here. We are looking forward to your success, and we're going to take a look through these charts. Our focus here, as always, is on trying to find accurate context, thinking about risk management first, and always remaining patient. So there's some good ideas for you, SR, as you get into your trading journey with us. Dr. Bleed, Dose, Dwayne, good morning. Sniper Scalper, good morning. Dan the Man, good morning. Lex Trader. There's a few new names there. It's good to see you. And again, you're popping in and saying good morning. Maybe you were watching before, but I really appreciate when you do pop in and say good morning so I can get to know you as you get to know me. Michael, good morning. Good to see you. Romanowski, good to see you. Lex Trader, okay. All right, so markets are going to close at noon today, so there won't be the opportunity for us to see live markets during Make Hogue Money, so we'll take a pass on Make Hogue Money today. However, we do have group coaching. That's at 12:30 today. As far as I know, I don't have any emailed in questions, but I still like to run it for those of you that might still be hanging around. So we will be doing group coaching at 12:30 today. I put in the link so that you can register if you're not already registered. And oh, okay. Andy Bleed is Glitter Sandwich. All right, Andy. Good to see you. Thank you for letting me know. I always like that name, but Andy Bleed's a good name. Dose, good to see you. So that link there will link you to register for group coaching, and that's today at 12:30 Central. We won't have live markets to look at, but I still wanted to do it in case anybody would like to come. We're going to have it today, but again, no Make Hogue Money, and probably pass on the recap today. The markets are going to close early. We'll take a look at live markets again tomorrow when things are kind of back to normal. All right, so let's take a look. Mike Fries is a lifelong Minnesotan. I'm not surprised the Vikings lost. There were some really good games this weekend. Really enjoyed watching these early playoff games over the weekend. Really good games. The one that surprised me the most, and the one I was, I think, really happy about was the Jaguars Or was it? Yeah, I think it was the Jaguars. Finished the game winning after losing the whole game. Well, Rusty Golfer, yeah, I'm gonna be here if I'm able, I'm going to be here. So it's good to see you, Rusty Golfer, my spirit animal. Yeah, that was a great game, wasn't it, DA? All right, let's take a look at these charts briefly, and we'll get on with our trading day. This is the S&P daily chart. So what we're looking at typically early in the week is reviewing long time frame context. The long time frame context in the S&P is, let me get this straightened out here, off the all-time high here. Contact, aberration. We're right at this trend line. The downside structure remains intact as long as we hold that trend line. Acceptance, and I remember I said acceptance above could change our overall longer time frame market state, and we're right at that level. But for now, we're still looking at longer time frame market state to the downside. Medium time, we're kind of ranging here. We're putting in higher lows, we're putting in lower highs. So I'm calling that some kind of an area of balance. But in the short time frame, we're looking at an attempt at a rally that could break a longer time frame market structure. Take a look at the 30-minute chart. Well, we'll go back to this. Market's trying to go higher. This is the daily chart, back at the daily chart. We had a pretty decent up move last week, which is great. You know, this is we're looking forward to a good year this year. Wouldn't mind seeing my 401k improving a little bit, right? So, what kind of performance are we looking at here? We added 2,500 in open interest on Friday on lower volume. It seems that the performance or the momentum is slowing a little bit here, and it doesn't surprise me. We may need to do kind of readjust inventory and some sort of a balance here, or some sort of a pullback would do good to do that. The question really is, are we getting too long to rally? That trend line again on that continuation chart, we are right up against it. So we start showing continuation to the upside with any oomph. And by oomph, which is an industry term, I mean an increase in volume and open interest. That may be enough to bring in new upside buyers, upside business to the upside to continue this move. Weekly kickoff level is 40.76. 76, that's the spirit. So we'll see if we can get a look at that at some point this week. Remember, today is a holiday market. Expectations need to be reasonable. Take a look at the 30-minute chart here. Okay, so overnight inventory, we don't really have any. We're off our overnight lows. Overnight high is just above last week's high. What we do have is a late spike. Now, if we were to open now, we'd be opening below the base of the late spike, which would show rejection of higher pricing, at least initially. Overnight inventory has now been reconciled. Here's the TPO chart. The low is the low of the initial balance is the extreme of the session on Friday. Here's our late spike, and there's really kind of two bases. The M base right here is 40.1625, but the market really started to kind of move higher and extend without having time to accept down here in L period with that base at 40.1175. We're currently trading 40.15. We're going to be looking at this as opening, if we were to open now, as opening in the late spike, which is kind of a secondary acceptance of higher pricing. So we'd be looking for opportunities to buy weakness if that were the case. We're just going to watch and see how this opens and take our opportunities as we can limit risk. When I'm talking about taking opportunities, the first thing I'm looking at is where can I manage risk? Where can I manage the risk if I'm looking for longs here? Well, if we can't hold the low of the secondary base here, that's going to kind of tell me that maybe that trade is wrong. So a lot of it depends on where this market opens up. Take a look at crude oil now. Crude is in rollover. This tomorrow might be the last day we trade February. It is going to roll into March. We'll be watching the volume. I'll let you know on the forecast when we're looking at moving into the March contract. It is scheduled for tomorrow. It could happen today. It could happen tomorrow. It could happen Wednesday. And I'll adjust all these levels when that time comes. So rolling into March, tomorrow into Wednesday. Structure, longer time frame is lower. Here's the continuation chart. Longer time frame is lower. Medium time frame, balanced. Short time frame to the upside. How good of a job is it doing? Remember that it's rollover. Remember, today are holiday markets. We're going to manage our expectations. It's been trying to go higher. Thursday, we had a loss in open interest. Open interest increased on Friday, 2,500 on a pretty decent up day, but the open interest slowed. Volume slowed. But again, volume and open interest, because of rollover, is extremely blurry. It's hard to decipher what is really going on because of rollover. Remember, the longer time frame traders they're trying to get a cheap rollover. They're trying to move their February contracts into March and future months while working the spread so that they can make money on the roll instead of losing money, and that takes a lot of focus. Take a look at the 30. Overnight inventory was largely moot. It looks like it's getting a little bit short now. We did have a late spike. We are opening or going to open or did just open below the base of the late spike. That's not showing good sign of acceptance of higher pricing, which we've been stair-stepping higher all last week. Where did it go? There it is. There it is. So we've been stair-stepping higher all week. Now are we going to start putting in lower highs and lower lows? It is entirely possible. So the main nuance that I'm thinking about if I'm trading gold this morning is the longer time frame is to the downside, medium time frame balance, short time frame higher. Are we at the upper extreme of the area of balance? Last week's high is right here. We've been largely, we did take one look at it. Where are we as far as our bear flag is concerned? Well, we tested to the low of it last week. We just traded to the high of it at the start of last night. This trend line, 1, 2, 3, 4, 5 points of contact and still remains resistant. I will certainly be looking at opportunities up against that trend line. Take a look at the TPO chart. The IB, extreme low, is the low of the session on Friday. We had a very even bell curve. It made sense that the market went searching for new levels to facilitate trade on Friday, and here's our late spike. We've opened below the base of the late spike. Nuance number one, early in the session today, is that's showing rejection of higher pricing. Does it have me looking for opportunities to sell strength? Well, we've got naked points of control. We've got naked points of control. We've got the lower trend line, which is a mile away from our potential bear flag, which may or may not be true anymore. So we'll really not expecting to see anything that is going to be major market changing today. Here's the NASDAQ. NASDAQ is actually performing better as far as volume and open interest than the S&Ps. We added an estimated 8,900 in open interest on Friday alone. Structure is the same: longer time frame down, medium time frame balance, short time frame higher. How good of a job is it doing? Well, it's been one time framing since before the beginning of last week. We've got a pretty tight weekly kickoff levels on this because this area of balance seems to be closing in. We're looking for change outside of those levels. Volume wasn't so great on Friday, but we did again add a pretty substantial amount of open interest on this push to the upside. It indicates new buying, still willing to come into this market to the long side. Is there some decent momentum to this? It seems as though with higher highs and higher lows, the momentum seems to be continuing. Again, holiday markets, smaller ranges, likely. Lower liquidity, likely. Manage your expectations. Here's the TPO chart. Okay, this is the overnight. This is our late spike in the NASDAQ. So we had a late spike in the NASDAQ as well. The base is the M base 11,599. The L base 11,579. So a 20-point difference there. This area, right where the market looks like it's going to open, seems to be important to traders. I'm looking at this as opening in the late spike, which means that there is a degree of acceptance of higher pricing. The probability isn't as great if we open flat out above the late spike. Opening in the late spike still has the nuance of continuation of acceptance of higher pricing. So here's that late spike. The initial balance Friday was the extreme low of the session. Just a double distribution trend day to the upside with a late spike. Acceptance of the late spike has us looking higher. Gold. So we've seen the gold kind of accelerate to the upside after this area of balance. This would be kind of expected behavior. The dollar has been weak, but again, the dollar is not going to be moving much. So manage your expectations. What's the longer time frame look here? Well, the longer time frame is kind of lower, but higher. Medium time frame, short time frame structure is to the upside. Here's back to the daily. Last week's high, last week's low, weekly kickoff. We're all the way up at this big fat round number of $2,000. We are going to be rolling this into April, a week, 2 weeks. What is it? January 31st. It's 2 weeks from today. 2 weeks from today. Is that right? It's going to have to be. So the roll to April is scheduled for that day. We'll, of course, be watching to see how the market is treating volume, and we'll let you know when we're going to be moving into the April contract. We've skipped right over March, and we go to the April contract when it comes to gold. Volume and open interest. Still pretty strong to the upside yesterday or Friday. We added 12,000 contracts to open interest. I mean, there's still money coming into the long side here. It is attracting business at higher prices. The probability is continuation to the upside, but it's never a straight line. We're pulling off a little bit here this morning. Remember, our longer time frame traders are not going to probably be around. Manage your expectations. We had a late spike on Friday as well. Here, take a look at the 30. So we had a small late spike. We did close above that. Where are we here? 21. No. How did that get moved? 2170 is settlement. So we had the late spike. We had continuation and a hold above the late spike in the session on Friday. But where did we open? We opened below the base of the late spike. In range, in value, overnight inventory short, little head and shouldersy looking thing here. The market is possibly telling us that it's gotten a little bit too long. And again, we're going to be missing a whole bunch of participants in these markets today. So again, manage your expectations. Here's the TPO chart. There's our late spike. We did close up there. Opening below it, we've got plenty of potential for repair lower without breaking upside structure here. Here's our overnight high, our overnight low. In the middle of the range. I'm going to stay patient today. I may not do anything. I don't know. Here's the euro. Dollar won't be moving much today. Structure, longer time frame is lower, medium time frame and short time frame is higher. Here's the continuation chart showing lower. Medium and short time frame is higher. Back to the daily here. Last week's high and low. Last week's high. Resistant to the euro this morning. However, on Friday, it looks like we had a kind of a long liquidation meets short covering type of day. We lost 1,700 in the open interest, and we lost a whole bunch of volume. Here's the 30. Kind of a P-shaped profile here. What are we looking at as far as overnight inventory? The market started here. It's trading here. Are we a little bit short, but we're in the middle of value? I got to stay patient. Got to stay patient today. What was I looking at here? Overnight inventory, for all intents and purposes, is flat. Here's the TPO chart. IB extreme at the low yesterday. P-shaped profile, losing open interest, indicates short covering. Losing open interest. Short covering should take buying power away from the marketplace. We're in the middle of the range, middle of value from yesterday or Friday, so again, try and stay patient. There's going to be very little change in yields here in the treasuries, when probably means we're not going to have much price change. Okay, the structure, longer time frame lower, medium time frame balanced, short time frame higher. But again, we don't have the majority of our participations today. Sure, we lost to 8,300 in open interest on this pullback. Looks like some long liquidation, a little bit of profit taking occurred on Friday. Here's the 30-minute chart. Here's our profit taking. Where are we? The market is maybe pretty much, I would say, largely flat. I don't think that there's a large amount of overnight inventory anywhere here. The market did open with a gap, and if we can't close the gap relatively early, there is the potential for some repair from this this spike excess that we had on Thursday. Here's Friday. Here's today. I'm not really going to be interested in doing much because, again, the primary markets are largely closed. Here's the natural gas. We had a 9,200 on this move to the downside on Friday. Now, nat gas is in rollover. Next Tuesday, it's going to roll into the March contract. So we're dealing with the same thing as far as volume and open interest because of rollover being a little bit difficult to read. The downside auction has certainly been presenting as healthy, and it seems as though it should be still healthy after that increase in open interest on Friday. But if we'll look at it, it looks like it's actually kind of slowing. The price bar overlap is growing. Take a look at the 30. No real overnight inventory. Showing a little bit of excess. We did have a late spike on Friday. Base of that late spike. Take a look. There's that late spike. We did close inside of it. The base of that late spike, it doesn't really matter now because we've opened above it. The base of that late spike is about 350. We've opened above it. That's rejection of lower pricing. We have excess here on Wednesday, Thursday, excess on Friday now because we've left the late spike at the extreme. Looking like we may see this market come back up and repair some of the leftover points of control above. Of course, if we do see longer time frame sellers come in, the IB extreme is neither in either the 10-year or the natural gas. All right, so looking forward again to seeing you for group coaching. Again, no make whole money. The markets are going to be closed, and I think we'll take a pass today on the reflection at the end of the day. I think everybody should be off doing something else by that time, so we won't bother you with that. All right. Some good conversation looks like with Sniper Scalper talking and asking some questions. Niners, Bills. Prefer the Niners, Jags, though. Yeah, you lived in Jacksonville for a while, huh? So you use the 2050 and 200 EMA. Most of the time I've got the 2050 and 200 SMA on the charts. So, let's call this a prep. Remember, manage your expectations today, ladies and gentlemen. Manage your expectations. Holiday markets. So on that note, let's take our deep breath. Stay humble, grateful, and creative today. Remember, manage your expectations. Holiday markets. Honor Martin Luther King today. And we'll see you for group coaching at 12:30. If anybody's still around, be happy to answer any questions. Until then, trade well, get on the profitable side, and I will see you later on today. Have a great day.